All right, welcome to weekly meeting, August 12th, 2023. All righty. Selena, do you want to go over the order blocks? We can just hop right into it. Or can you?
I mean, I can. If you can share the screen because you already had it up.
Okay, all right. You want me to do your job? Cool. Let me see.
I'm kind of out this morning running stuff. So, yeah, help us sister out. Thank you.
I knew it.
What'd you say, Sean?
I said I knew it. I knew Selena was out. Driving, or
Streets.
doing whatever.
Selena
Okay.
went to Beyonce last night.
No, I did not go see Beyonce. I stayed away from the city. Did not go and see Beyonce. Okay. Did you go, Will? Are you going?
Hell no. My wife went to that.
Okay.
And Beyonce.
That shit is way too much money to be wasted.
Exactly. Never that.
Say,
Okay. Who is that?
Leandra.
Oh, okay.
I saw her on her second show in London.
Oh, okay.
Yes, you can do
$5 meet and greet
All right,
pack.
y'all. So the weekly order blocks, because I know Todd and I started recording. So anyway, what I did this week is I put the weekly order blocks against the 2-week order blocks, and I did not put the date on it. I just put, the weekly order blocks. So AJ, AN, CJ, Chef JPY, DJ, and NZDK are the order blocks for this week. And in 2 weeks order blocks, there's Cat Chef, as you can see, Elfie's Baby. I don't even know if she trades your 30 anymore. Euro GBP. Todd definitely is not going to go over that. Euro JPY. And what I do like is GJ. I love the fact that it has a bullish order block on both time periods. Nas, and XPX 500 and gold. So these are the order blocks this week. I did not do any check for God's plan this week, so I may have missed some potential retracements that we may have had. I just wanted to put that out there. Thank you, Todd.
Gracias. Okay. Did you have a favorite? You said GJ?
Yes, GJ.
Why? Because it has the same order block?
Yes.
Take that there, homegirl who told me that they didn't like GJ. Hopefully these picks are better than last week's picks. Ah, boy. Not in love with this pick either, though. All right, that's the 2-week candle. Let me see how many dips that we ran. 366. This week must have been all 366, huh? Okay, we pushed up. Looks like we're getting ready for the pullback. This is that order block that was in the zone. There's some imbalance here.
Hey Todd,
Yes, sir.
when you get a chance, could you go over the spring in Wyckoff, your interpretation and the structure when it comes to a sign spring,
You said when it comes to what?
a spring in Wyckoff, a sign of strength on the spring?
Okay. Or a sign of weakness if you're going south.
Yeah.
Okay, these are the two imbalances that I see, at least using the 15-minute. I'm sure on the lower time frame, it's probably a few more. But this is what I would start with. So maybe we will get 167 to the zone right here. So not a bad pullback. This pullback is going to be the same as the 2-week chart, because the 2-week chart is the same difference. If it goes to the 78 or close to the 78 to the second level, just past the 66 or 61.8, you get 216 pips. Do I have any questions? Did everybody see how I did that?
That was forward.
Yeah.
That was pretty forward.
All right, let's look at this news really quick for the coming week. Sunday is clean. Monday, we got AUD in China. GBP on Tuesday. Canadian on Tuesday. US on Tuesday. And then NZD. NZD actually has a rate hike. I don't know if they're going to hike, but I guess they have it there.
What time was that U.S. news tied on Tuesday?
8:30.
Thank you.
All right, Wednesday. One of the Fed people will jack it up in the afternoon. Then AUD has unemployment on Wednesday night. Guess this is a busy week for AUD. Thursday, we got unemployment. And that's it. So if you're trading that GBP pair, then you're clean until Friday. Is that G? That's only. Did we say it was another one? GDP comes out Friday for British pound. I thought it was one other thing.
It was Tuesday as well, I thought.
Okay, let's look again. I'm too far. 12. Okay. Tuesday at 2 a.m., whatever claimant count is, I don't know what that is. And then Tuesday and Wednesday. They have CPI. They have retail sales on Friday. It's a yellow folder. It's probably a red folder on the app if you have the app. So I guess depending on how y'all feel about it, if y'all gonna take that GBP trade.
I'm gonna wait till Tuesday.
Low hanging fruit, please. Whatever that is. Low hanging fruit.
I don't, I mean, the thing is, if you Sunday it should start selling. I mean, if you're waiting for Tuesday after the call to buy, then maybe Tuesday night will be the time that we wait to buy. However y'all want to do it. We talked about waiting until Tuesday last week, but if you're going to do something different, or you're going to do how we've been doing it, then you can sell it down to that area. Hopefully it sells down there. By Tuesday. If you had bought UJ and stayed in your UJ trade this week, you'd be very, very happy. If you had waited till Tuesday to try to sell UJ, you'd be disappointed. So, either way, I'll be on the call Tuesday.
And understanding when you're in a healthy price action, like it's supposed to come down to that 78. That doesn't mean it's selling. That means it's still in the healthiness of the buy. So when you understand that, you know why you're doing what you're doing, right? This is the weekly pivot. It should take you down to your entry. It's proven to us that it's bullish, and then it's going to come down and tap you in. That's the intention of everything that you're doing with that pair. And it's almost as if you don't need a stop loss because it's healthy. Like it shouldn't go past the 78. Or it might not even make it fully to the 78.
Exactly. Okay. Let's go and look at this.
Did you say it might not make it to the 78?
Well,
Okay.
yeah. The
Yeah.
idea is that it's bullish. You should be getting higher lows, right? So there's a chance that it doesn't touch the 78. It'll get close. It'll make a right?
Yeah. I was thinking that same thing too, and that's why I'm gonna do the ICI trade, because it'll like tap you in around 61.8, because sometimes it doesn't come all the way back down, but why miss the trade,
Right. Wherever it stops, that's where you're going to get the 78 on. If it in this, how do I say it? If it doesn't come to the higher time frame 78, wherever it does stop, that's where it pivots, right? So once that pivots, then you're going to get a 78 on that position. That's how you don't miss the move. Let's say it goes to the 61.8 and it doesn't go to 78. Well, off that 61.8, you're going to get a 78 off that pivot point.
You mean like on a different time frame, it'll show like a 78?
No. Okay, so the idea that this is going to drop and give you a buy position. Let's say it's at the 61.8 and it's not the 78. Well, at the 61.8, it's going to pull off of that, and then it's going to come around and give you a 78 on that specific position. That makes sense?
No, I'm not following, but
Okay,
I get the idea overall.
we know that it has to drop from that high point. Wherever it drops to and it stops, then once it pulls off, it's going to come around and tap you in. Whatever that level is, it may not be the 78 on the big picture. It may be the 61.8. But wherever that stop point is, it's going to go and bounce off of it and then come around and give you a tap in.
Oh, okay, yeah. Retesting that, yeah.
You just need to know where it stops at. Once you got that, you're locked in.
Mm-hmm.
Yeah.
And you'll know because it should give you a chalk, a change. You should see a change of character, and that's when you'll know that it's ready to go the other way.
Right.
All right, so let's talk about this white chalk. Okay, this is a 8-minute video, and then we'll talk more about it.
Hey guys, welcome to my channel. So in today's video, I'm going to talk about how you guys can start identifying schematics. Now, I'm not going to go into no crazy deep detail of how to do the schematics because as you guys know, I mostly focus on the simple ways to trade Wyckoff, smart money, whatever you want to call it. But I do know there is value in understanding the schematics because it helps you understand where you are in terms of the current cycle of price at a current time in the market. So I'm not gonna teach you guys every single thing, but I'm gonna teach you guys how to learn it. Okay, because I've just honestly learned this simple thing and it helped me understand schematics more easier. So with that being said, let's get started. Now, for the sake of this video, I use a certain book that has schematics and I like how they have it printed, but I know the internet and copyright, so I'm not gonna use that book or put it in here. But I'm gonna just use a simple Okay, I'm gonna use a simple photo off of Google right now to kind of describe how we can look for this in particular distribution schematic. But this is not the one. It's pretty much the same. There's different types, right, guys? So I'm just gonna go over the basic on how to really learn it. I also have a book recommendation that also helps. It's very heavy, it's very detailed. The link to that will be in the bio. It's called The Wyckoff Methodology by Ruben something. By Ruben. Okay, let's get started. Now, honestly, this very simple thing is what I struggled with when it came to understanding schematics. And that is understanding your trading range. So this is my trading range. Okay, so this is this line here and this line here. Now, guys, this trading range is comprised of two components, your buying climax and your AR, or it can be your selling climax and your AR. So literally wherever you are on the chart, let's say the buying climax is up here. I will label this BC and I'll label this AR. So wherever these candles close is where your buying climax and your AR is. Okay, so if those are where the candles are, that's where the candle comes up and then down. That's where you would have your trading range. Now, this is important because everything we do now is in comparison to this trading range. So if price goes like this, that's our buying climax. And the first time it comes down, that's our AR. Now, between that, if the market just goes like this, and this is all randomness. So until it comes back and tests the buying climax area, then that would be our second test. Now, sometimes I see people practicing and they're not doing things in order. So these things have to be in order. So the second test doesn't come before the AR, doesn't come after, the SAO or anything like that. It comes before that. Okay, so you want to make sure you guys are copying these charts or whatever schematic you're using in order. I noticed a lot of people are kind of labeling things all over the place, and it has to be in order. So buying climax, AR, identify trading range, and then start with the motions. Okay, so when we're identifying the schematic, we're copying, okay, the ST comes up to the line. Okay, the up thrust goes above the line. The SAL becomes before the up thrust and it goes below the AR. So you want to copy the exact distance. I want to say the kind of the jump skip in and the jump skip out of the trading range. Okay, so now we have our second test, and then it's doing whatever, and then finally it goes outside the trading range, which is our sign of weakness, and it comes back in, and then it goes above all of this, which is our up thrust. Okay, and then it comes back in the trading range, does whatever it wants to do, and then we get a UTAD, which is supposed to be above that. Okay. Okay, so this uphill right here, we've got a buying climax, second test, up thrust, 1, 2, 3. I'm skipping the second test, so I'm calling this 1, 2, 3. It's going to show us distribution. Now, we're going to start entering off. Some tests. So, for example, say this UTAD comes up, comes back in, and then comes back up. That would be our test. Now, how do we know where to enter in on that test and how far to go? This is where our basic point of interest comes in, guys. If there's an imbalance right here, this is where you would sell at this imbalance fill, stop loss above the UTAD high, and continue. And then it may come back in the range and retest the range, right? And leave the range again and retest again. And between this, guess what? You might have other order blocks, points of interest. So it's very simple to get in on the test in your LPSYs. Okay, so this is over here. So I hope this was useful, guys. It's not too much in depth because you do have to practice.
Okay, so let's talk about this. How does this help you? And help. OG, tell me if this is what you're getting at. So first of all, on the higher time frames, you're expecting price to turn and go down, right? That's when we expect to see this distribution schematic. I don't know what time frame this would be on. Maybe it's on the 15-minute, could be at the 4-hour. It depends on what chart you're looking at. The point is you want to be able to identify some of these things. Most of the time on charts, we can identify where we say the top of the market is, right? Like, hey, we expect the market to sell from here. So then it'll go through one of these schematics, to sell. And what I was asked specifically today was to talk about this SAL, the sign of weakness, right? So once the market gets to the area, right, that we think, hey man, for all intents and purposes, this is the top of the market. You wait for the market to come and retest, right? This is the top of the market. It's going to come and give you a range. It's going to go back up there and do the second test for the top of the market. And then it's going to break down. It's going to go lower. And it's going to show you a sign of weakness. Hey, we're ready to go lower. But instead of letting everybody get in the trade right here and win, it needs to scare people out of the trade. So you get the up thrust. All we're doing is manipulating the highs right here, right? Going to get the up thrust. It'll come down, right? Probably a 61, 78, whatever, pullback. It'll push higher. The up thrust after the distribution. Now everybody is really thinking that it's going long. And that's when it'll give you that ICT move where it'll give you a strong sell candle. It'll come up into the imbalance and then you'll start pushing down. And they'll call all these the last point of last sign of weakness that you'll see those abbreviations they'll start putting over here. But you'll get several entries.
Supply.
What's that?
Last point of supply.
Yeah, there you go. And they will it'll give you several entries as it pushes down. Once we break this sign of weakness, you'll get another entry of eventually. It'll push down and then it'll pull back to this level and give you your last entry. Does everybody understand that? OG, is that what you were wanting to get at?
Yeah, that's the distribution side, and we flip it, and then we get the accumulation side. When we think we're at the bottom, GJ is a great example because it's bullish. So we're looking for this pattern flipped, right? So once it comes down to the 78, if we flip this upside down, this is the exact schematic that you're going to get to catch the move that's going to push through resistance. GJ is heavily bullish, right? It's healthy. It's telling us everything it wants to tell us. Now, the spring is one of the things that I pulled out of Wyckoff, and I didn't see it in this explanation. The spring.
So the spring is going to, I mean, when you flip it upside down, the spring is basically the UTAG.
Right.
It's the lowest point on the chart, right? And it's going to happen right before price pushes bullish. It's going to dip below the lows and grab the liquidity the last time, then it's going to push up. Same difference though.
Yeah.
It'll come back, it'll pull back and let you in the trade on that imbalance. We should see this right now, or maybe on some time frame on GJ.
Yeah.
We should see GJ topping off, right? See how it's topping off? For all intents and purposes, this is the top. Then it comes down. Then it comes back up to test, right? It'll come down. It might go higher to grab liquidity, which would be the UTAD. There's a couple of different scenarios or a couple of different schematics that can play out. But for basically, you have the two highs right here. Maybe we go up here and grab the higher, which would be up thrust or up thrust after distribution, depending on which schematic plays out. So the way that your girl teaches her Wyckoff is to go back and label this, right? Nobody should really be hopping into the trade, even though if you see the liquidity grab, there's nothing wrong with getting in the trade. Even if it goes a little higher, you already understand what's happening. You understand that either this is going to be the up thrust or it'll go higher and you get an up thrust after distribution. If you use a lot size that doesn't hurt, then it won't really matter. The point is, this is the top of the market. And you got at least 2 points on that Wyckoff distribution schematic. We got the first 2 points. Now, when the market opens tomorrow, you'll either get an up thrust or you'll get a UTAD, and it'll keep pushing. There are several different schematics. I think there are 2 or 3 for distribution and 2 or 3 for accumulation. So this is what we're seeing on the chart for GJ on this 15-minute time frame for it to turn around. I always just say, hey, when the price goes up and gets flat, when it gets flat, that's Wyckoff playing out, right? It's going to get flat. It's going to consolidate. A lot of people call it consolidate, but if you actually do the homework on this consolidation is just Wyckoff playing out. And if you know what to look for, you can get in the trade. That's why you'll hear a lot of people say, I'll get in the trade once I see the liquidity take. So once you see this candle that goes up above these highs, a lot of people get in the trade. But if you have a schematic like this one, if you jumped in this trade, it's going to push down, put you in profit, and then pull back up higher to try to scare you out of your position. But if you know that it's selling, then you don't have to worry about being scared. When it pushes down and gives you the imbalance and it pulls back up here, you get position number 2, basically at the same level, and you're rolling out. And if you notice, this is a head and shoulders. So this is the distribution, and I think she's going to talk about the accumulation.
That's it. But the key things, if you're taking notes, and you should always take notes, is step 1, identify your buying climax in your AR. Step 2, create your trading range. Step 3, identify the highs and lows above it. So now quickly, I'm going to show you what I had on Euro JPY, and I'm going to mark that up quick for you guys. Okay, awesome. So this was my trading range. This is my buying climax. And I made this line, and make sure you do this neat, guys. No crazy colors. I literally make this a dashed line. and this was my AR, which is a dashed line. Okay, so then here's my buying climax. Here's my AR, so that's my trading range. So now everything that happens around this. Now, sometimes your second test can come a little bit above it, and then I have my minor sign of weakness because it came outside the trading range, and then it came back up. We call this up thrust, and then whatever happened again, and we call this a U-TAD. Now, with that being said, once that U-TAD happened, and it left off, and we got a major sign of weakness again, more signs of weakness outside the trading range, what did it do? It came back, it tapped back in to this area, and what did it do? Let me change the time frame. I think this was a 1 hour. Yeah, it came back right into the trading range in the exact spot and filled the imbalance. Stop loss above the high of a different time frame to get a better snipe, like so. And then sell all the way down.
1 to 10.
Like so. Your stop loss below the low, a 1 to 10. Okay, so that is a quick, you call this test LPS, whatever you want to call it. I call them both the same thing. So this is how you pretty much use schematics. Again, I don't really teach schematics like that very heavy. I just focus on what? Boom, imbalance fill, right? So, because this can stress you out, but if you at least know how to enter at the end of a situation, well, that's all you really need to know. Okay, but so hopefully this helps you guys understand how schematics really work and how it comes into play when it comes to imbalances and points of interest. Thank you guys so much for watching. Don't forget to comment, like, and subscribe, and I'll see you guys in the next video.
Boo, boo. So we talk about the flip side, but it's the same thing. This is which one of y'all paid for Samantha stuff? I know Dez did, but her rude ass. But anyway, it's the same thing for the flip side, right? Price is gonna come down to the bottom. You know, I'm sure we'll see one as we go through these par. What par sold? Like gold. I know gold sold. It's the same thing, man. Same situation. Give me two per. So in this case, gold comes down, and for all intents and purposes, this is the low. Then you get the AR. This is the manipulation. This is the first manipulation. So at some point, it's going to come below this line right here. And that'll be your spring. And your spring, after your spring, it should push pretty rapidly to challenge these highs, right? And sometimes it'll actually break these highs and then it'll pull back. And the pullback is going to be the 78. Is going to feel that imbalance, you know, like we talked about on GJ. You want that a long or a strong bullish candle that leaves an imbalance. And then on the pullback, you want to feel that imbalance, and that would be your entry. You don't have to catch the spring. Now, if you're a lazy person, or maybe you just don't have time to sit and wait on the charts, and you just want to put you a position down here, because this is where the liquidity is. I mean, I've seen people do it that way too. You just have to use a lot size that doesn't hurt.
And Fuego.
Y'all have any questions?
Yes, I was asking whether GU and GCAT is that what happened, especially GU last week.
I don't know. You mean I don't think GU is going to buy now. But I think you're getting Wyckoff playing out here though. That's what I believe. So last week, this was your this was your I mean, it came right down there to the liquidity. So last week I was thinking this is going to buy, and well, it did. It did buy. It just is not going to go higher than these highs. You know, I was sure based on this Fed move up, 78% pullback. We got the push up. We broke this high. We pull back in here. I was thinking we're going to buy and go higher, but now I'm thinking that that's not going to happen based on, you know, those news events and the dollar showing signs of being bullish. But you could have definitely found a trade, you know, below these lows. I mean, and who knows? Like some people are still in the long for GU, but you know, I just based on what I saw and the strength of the dollar, I got the heck up out of there. So I think that if you're bullish on the dollar, then you can't hold this GU long. You got to get out. If you're still not sure, then you gotta come up with a plan, right? So maybe you want to let it go up higher before you get out, or maybe you want to just see, because you know, maybe Todd don't know what the hell he's talking about. Maybe this is gonna go higher. I mean, it to me, it can go either way. I don't really like the 50-50 trades.
Hey.
I'd rather be in a trade that I'm pretty darn sure of. But when I look at the dollar and I look at the area that I had marked up based on this imbalance, we wicked it and we pushed down. We came up here, we were good with this wick, but you know, the thing that bothers me is you got the bullish order block and then this extreme daily candle, right? So I think we're going higher. And there is a level up here that needs to be taken care of, which was never taken care of, which is right here. So I can see a case for the dollar pushing higher. And on a bigger time frame, I mean, this could very well be Wyckoff playing off. This is the bottom of the market. There's your break of the high, which is a sign of strength. And it comes down here. Then this could be the spring right here. If we could push back up past these highs, come back and give us our entry to bring up here. So I really think it just depends on your level of understanding.
It's a beautiful thing. I think people seeing this for the first time, if they've never tried to do this, Wyckoff can be very hard to understand. But if we expose it to you in bits and pieces, you can clearly see it. You don't need everything, but the fact that you know, we have relative equal lows with a liquidity grab, I think everybody can understand that in layman's terms. That's exactly what you're seeing. So, and with the GU pair, it was great conversation, because if that buy was correct, it would have been out of there, and it's not. That's the point. See, it should have just got out of there, and it didn't do that. You got to know that, right? If it doesn't get out of there because it's supposed to respect the Wyckoff pattern, it didn't. That means it's going lower. So this is something that helps you see that quicker.
And to me, this chart tells the story, right? We got 6 days left on this candle, and we're going to get a bullish order block. But if you look, price comes down, right? You get your basically you get the exhaustion right here. This is the low. We broke this low. Price pushes right back up to break the high, right? Now it's in a range. It grabs the liquidity for the spring, and now it's, see how it's getting the hell up out of here. It's not even feeling any imbalance. Price is just rolling out. So this candle should end, somewhere up here. You're gonna get you a bullish order block. Then you get a pullback to let you into the trade, and then price will go up and close this imbalance. It'll probably hit this blue line right here, 110. I got it at 108 is really where it should sell, or where it needs to touch. But the imbalance closes at 110. So I would just watch these levels. I mean, there's a reason that that price is pushing back up. And like we've seen these levels for months. I mean, this has been on my chart forever. So I'm not surprised. I am a little bit surprised that it happened now. I thought we would go lower once these broke, but even you can see the rejection from here. So this will go higher, likely. I guess it'll just make a new high. Maybe we will grab the liquidity from the top of this wick. And then maybe we'll push lower. But by us breaking these lows, it's telling us it's going to go lower. Maybe it just needs to grab liquidity up at the top. Maybe it won't break the top. Maybe it'll give you equal highs. I don't know. But bigger picture, I think that UJ and the dollar are going to sell. It just needs to push higher before they sell. Because these are basically, I mean, this is a order block. So y'all have any questions on that? All righty, moving right along. Pull these order blocks back up. Okay, I know it's not on here, but GC and EC, I guess, do I have people is anybody still holding those trades? If not, then I guess it's really no need to talk about them. I'm still bullish on them, but if you're not holding, there's no need to talk about it. What trades are you guys looking at or holding?
I'm holding UJ and GU. I'm in a hedge on both of them. I didn't close them out. So those are the ones I'm holding. So now I'm just trying to decide, do I find another picker for this week?
Well, you're going to get a pullback on UJ before it goes higher, I would think. I mean, it ran 300 pips just like GU or GJ did. It did the exact same thing. So, the direction. If it pulls back $1.50, you should be heavier on your sell, and then you can close your buyout when it pulls back. And GU should do the opposite. It should push up, and then if the dollar is getting stronger, it should sell. If you're in the trade, you should already know. You should have a strategy, an idea of what you want to see. And especially if you're in a hedge, the hedge is just about taking advantage of what direction it's going, right?
Yeah, I'm definitely in the hedge, and I feel like UJ is going to buy up to that imbalance. I just don't know if it's going to do it at the start of the week, continue to buy, or is it going to retrace first? So I'm just going to wait and see which way it decides to go, and then I'll put in another position. And and then I'll buy when it starts to go down.
You don't think UJ will do the same thing that GJ is going to do?
I don't know. I hadn't looked at GJ, but I do feel like it's going to feel that imbalance. I wasn't looking. Sorry.
See, well, you got it in Big Baller. There's an imbalance that needs to be filled down here. But I would just do the same thing. I would throw the fib on this joint, and find the imbalance. I think the imbalance is probably the same spot as that big gap. I mean, I said the imbalance. The 78. Man, this thing is a full candle. Ain't no wick at the top of that bad. Not much, huh?
Like none. It wasn't even playing.
This candle is a perfect candle. That's 200 pips to the zone. 331 to the 78. Oh,
And
you
the
got
crazy part is still, to me, it didn't violate that 2-week bearish order block either.
it doesn't have to. You just sell it back to the zone. Just go ahead and sell.
No, I'm just saying, yeah, definitely celebrate. It's still, but I'm just saying, all that buying that it did, I thought for sure it was gonna go ahead and violate that 2-week order block, but it did.
No, it didn't. It did not. But neither the dollar didn't go past that zone either. But this is where it needs.
Probably do that first and then pull back.
Maybe I mean, listen. Either way, you can be prepared for that move down to the south. If I look at this 15-minute, it's definitely doing something. Maybe this was the top. It pushed down, pushed up. I don't know yet. Like it's not enough action, but I can see this turning the seller from here without breaking those highs. But maybe it will. I think this needs to have that first hour so we can see exactly what it's doing. I don't think it's enough information to be able to tell whether it's selling immediately or if it's going to break this high first, or if it just make equal high, relative equal high. Because sometimes that's what the market will do. It'll set up the next move, and it'll create liquidity by going to this point and turning around. It definitely broke out of this block. Broke out, retested, and rolled out. So I'm definitely going to look for the sell. Because if you can just catch UJ, if you sell UJ back to the zone from where it is right now, that's 215 pips. So if you're in it, like I am, like you are, then if you are down, this is more than enough room to make up what you're down on your sell trade. You don't have to kill your buy. I'm talking about on your sell. Your sell is in the negative, right?
Yes.
So this is more than enough room to make up for that negative. And you can close your sales out once it turns. I mean, this is 213 pips just to the 50. Just to the 50. If this goes to the 78, man, 335 pips. If you still negative, man, you just need to turn in your account. So later.
Yes.
Oh, you bad?
No, I'm not mad.
Yeah.
Yeah.
Yeah, if you're still negative,
I'm not mad because I didn't hear what you said, but it's all good though. I'm stuck in the
I said if this is a 300 pip move to the 78. If this comes all the way to the 78 and you're still negative in your sell position, you need to turn in your account. Like give it to somebody who actually wants to trade it.
Whatever. I'm not going to be negative. I am going to say this. I am very proud of myself in the fact that
Proud of you too.
I held this trade all this week. I don't know the last time I've ever held the trade the whole week. I put my hedge in, and you know, I wish I would have doubled it, but I didn't want to over leverage my account. Because I don't ever want to have to buy another account unless I just choose to, not because
I think I speak for all 28 people on the call that says you will never over leverage accounts. 0.03 is not going to over leverage your account. I'm sorry. It's
you
not.
know I'm never gonna over leverage or whatever. Sean, hush.
It is not going to over leverage. Yeah, I mean, listen, you've been doing great. All I'm saying is, like, you have an opportunity, I think, no matter which way. That's anybody who, if you ever get caught in a hedge, you know, that's why I always suggest holding it, because you get clarity, you know, at the end of the week. Now you can see what to do with it, right? You're expecting a pullback. On that pullback, man, I mean, make the pullback, make them pay, because this is your advantage over the market. And you don't have to guess about the pullback. You can wait until you get a whole 4-hour order block that closes below this line right here. That's how much space you have going down, right?
Yeah.
You don't have to guess. You're like, this thing can go 80 pips and close below the moving averages, pull back, and then you get in trade. That's how simple this should be, you know. You don't even have to try.
Slow motion for me.
Huh? Did you say slow? Are you rapping? Oh my God, that's why you don't go to Beyonce concerts right there, guys. I was trying to find a video, man, of this woman that I watched the other day. She said it was a cult concert, Beyonce cult concert.
Oh boy.
I'm just telling you.
What's that? Sorry.
Oh, how you doing, Leandra?
Hello. What do you say about Beyonce?
I didn't say about you, Leandra. I just said Beyonce had a cult concert. That was this woman was saying. Beyonce's concert was a cult.
Oh, whatever. Congratulations, Selena, on holding your trade.
Why did you say whatever?
Thank you.
Because loads of people say that about Beyonce. But no, I think this is a big milestone. We shouldn't overlook what Selena just said. She said this is the first time she's held the trade for this long. And it takes courage and confidence for someone to like hold a trade for this long and feel comfortable. You know, so I don't know if a lot of people are in that same situation that they, you know, feel a bit uncomfortable holding a trade. I've definitely been there when you felt uncomfortable holding a trade, especially in a hedge. When do I get out of hedge? So Selena, I don't know if you're free to just talk about how you approach this, like mentally, like how did you feel when you was putting in this trade? Because I know you've come a long way in your trading journey. And I just don't think we should overlook this because it is a big milestone.
For me this week, I promised myself that I was going to listen to what Todd said and just do it exactly like he said, do it for this week. And that's all I did. I am getting better with holding my trade. And, you know, everybody laugh at me because I never put in huge lot size. I always use my risk management. And if it calls for, you know, a bigger lot size than what I put in, then I usually always go on the conservative side. But I just tried to do what Todd asked us to do on the call last week, which was to hold the trade. It didn't go my way and my hedge picked up and I still let it run. The only other thing I wish I would have done better was doubled my hedge. So I would definitely be in the positive now on that buy. But I will be honest and say I did scalp a little bit and, you know, took some of those buys, but I never got out the original 2 positions that I put in because I really just wanted to see how it played out. So yeah, just, you know, I appreciate it. You know, we have to take the little victories as they come. And for me, you know, I've had this account since January, and I can't remember when I qualified. I think I finished the second qualification in April, and I just want to hold this account and just try to grow it. And you know, so that's big for me. But that's all I did. I didn't do nothing special.
No, that's amazing. No, because Todd says every week to hold, you know, just hold the trade, just hold the trade. So what made it different from weeks prior to this week? You actually held the trade. Like, what, how confident were you in holding this trade, like, from the previous other weeks?
Because it's just I just wanted to, you know, I'm confident in holding the trade. I never am, but I had to trust my analysis, and I just know that's a something that I have to work on. So for me, I just said no matter what, I'm gonna hold this trade. I didn't stay on the charts all week. I didn't do any of that. I just, you know, I looked, and I called Todd a couple of times, but I held the trade. So whether I won or lost this trade last week, you know, I'm in the whole $200 because I'm in UJ and GU. I'm in a hedge on both of them, and I'm okay with that because when this week start, when the market open, the spread is not going to affect me. It's not going to blow my account. It's not going to do any of that. And so once the market tells me where I need to go, and then that's when I'll start cutting the hedge, whether, you know what I'm saying? So I feel like it's going to buy up a little bit more. So I'm going to let that ride. But then when it starts to sell, I will cut my buy hedge. And, you know, I just want to play this out.
No, you won't.
Oh, Todd said I won't. Never mind.
No.
I'm going back on.
Listen. This is for everybody.
Wait, can I just say something quick before you say what? No, Selena, that is amazing. But I just want everyone to hear what she said. She said she trusted her analysis. She had faith in her analysis that it was right to enter the trade. She was confident in what she was doing. Even though Selena does the order blocks, the analysis every single week for about, is it like 2 years now? She's been doing that for a year or two, year and a half. And she finally trusted herself and trusted in what she sees to enter the trade for a swing trade for a week. Guys, have confidence in yourself. What you're seeing is correct. It repeats over and over again. And I love how Selena uses great risk management because I aim for that all the time. But yeah, congratulations, Selena. Well done, sis. Thank you.
Yeah, congratulations, Selena. Here are your flowers. Now, hey, for the rest of Leandra.
If we're gonna cut off the recording if we're going into this.
Listen to me, Leandra. I want you and all y'all Beyonce enthusiasts to look at this podcast, Social Proof, with Tiffany Montgomery. Okay, it's very interesting, at least to say the least. I liked it. But Selena, let's talk about your UJ trade. You said that when it starts selling, you're going to cut your buy hedge. My question to you is, why would you ever do that when this is going to buy? If you're bullish on UJ for the week, and this is just a pullback, all you're going to do is add to your sell side, right? You can sell it. You're going to, add to your sell side. Once it gets down here to your zone, you will be positive. Even though that one sell position is going to be negative, you'll have at least one. I would have three, but you would have at least one sell that's positive. And the positive sell will be more than that negative sell that you have, right?
I'm tracking.
So whatever your sell position is, it might be negative $300 right now, negative $500, right? And right now in your account, you have a negative $500 and a positive $300 buy, right?
Mm-hmm.
So when the market opens and you see that this is selling, you're gonna input a sell position here, and this is going to sell down 300 pips or 200 pips to the zone. By the time this gets 200 pips, as long as this sell position is a 0.50, $5 a pip. I'm just making this up as I go, but I would at least have $5 a pip. And it goes 200 pips. That's
Yeah.
$1,000.
Okay.
You've probably not had
I'm
1,000
tracking.
since you qualified that account. But my point
I
is
have not.
this. My point is, if you get this bearish order block that closes, I mean, you can go 2.0. Listen, all I'm saying is you're going to have ample opportunity to sell down. And by the time this sells down, you don't have to touch that buy position. By the time this sells down and finishes, and you take profit on this sale, and you close that other loser out,
Hey,
you'll be up $1,500, $1,800. Then the trade is going to turn around and buy. You already got a buy position in, but you can add another one.
Correct.
Now you at the end of this week, you might be up 3K.
hey,
Correct. I'm tracking. Okay.
So that's why I'm saying don't cut your buy position up. You just add your sell position. Hopefully everybody understands that idea, when you're hedging. It's no different than if you were here and you trap price. You were buying, right? Or you were buying, then you sold. And it came down here. You would close your sell and you'd add another buy. Even though this buy right here, this buy might be red. Then you add another buy. By the time it gets here, you got one break even and you got one that's already in profit. And they're both in profit by the time it gets up here. You just have to kind of understand what you're expecting out of the market. If you're expecting a sell to buy and you already have a buy position, you don't care if your buy position is going negative as price is going down, because your sell position, your one or two positions up here that you're selling down, should more than make up for anything that you're losing.
that's the breakthrough. That's the breakthrough people need to have. One of them, a major important one, is that you don't need to close that trade if you have it trapped properly. Right? It's tricky, but it's just something that you have to graduate. Once you understand how it works, people are like, well, you don't ever show losses. Well, because I don't close the trade. Now, I'll take hits, but it's because I'm not patient. It goes right back to the entry and it goes blue. It does it all the time. And we get scared. No, trap it. Right? It's easy to say at this point, but when you see it happen over and over and over again, your confidence starts to develop. And then you don't have to close these trades. They go negative, they go positive. They go negative, they go positive. And we close it out because we're scared. And that's what the market wants you to do. That's why it's predatory. That's why there's induced.
That's huge. That's huge. That's it. That's huge. Sorry,
Definitely. My question, I have a question, because I think this is exactly where I get stuck. Where are the correct spots to trap them to trap price?
Well, let's talk about this, Elfie. We don't have to go to a higher time. We can look at this time frame right here, and we can see a impulse move, a pullback, impulse move, a pullback, impulse move. We'll get a pullback, right? I mean, can you see that?
The minor pullback at the 4, yes.
Okay, so even this minor pullback at the 4, right? Even if we're just talking about a pullback and we fibbed from here to here, and you're talking about a pullback to this zone. This is a 172 pip pullback. So I'm assuming you're in a buy right here. You're not canceling your buy because you're expecting the market to keep going forward. You're just selling the pullback. So you're going to have a buy that's positive because you bought it from here. And then you'll have a sell that's positive because you're selling it from here. And then when you take a screenshot, people are going to be like, man, how do you get a buy and a sell that's positive?
Hey.
Because I know I bought this. I made money right here. I don't want to lose the money that I've made on this leg. So I'm selling. And when I do this, I'm not telling y'all to do this. At some point, what y'all are going to do is, once it starts selling, you're going to double the lot size so you can make money twice. So you're going to double the lot size and sell it to your area of interest. Now, I'm not saying you have to sell it all the way to the 78 at double, but you're going to sell it to the guaranteed spot at double. And then maybe you cut off the extra and you just have a hedge until it turns around. However you want to do it, there's no right or wrong way to do it. It's just which way are you comfortable with doing it? You're just taking advantage of the market going both directions. And I'm not saying you're doing this on the 15-minute, but because you're trading, we are all trading this weekly candle. We're saying that the market is bullish, but it needs to pull back. We don't want to lose our bullish entry that we took down here. We got a bullish entry down here. When it pulls back, it's still going to be in profit. It's just not going to be as much profit as it was up here. The way you protect the profit that you had up here is by selling it back down. Now, when it turns around, you can add another bullish position here. You'll have one here. You'll have one here. And now when the price goes up, you're going to get paid three times. You got paid going up. You got paid coming down. Now you get paid again on this leg of the candle going up again.
Because it's a bullish order block.
Right.
A nasty bullish order block. That's not questionable. That's bullish.
So I have a question, Todd.
but
Can you go back to the whatever time frame you were on before the weekly? I think it was like 1 hour.
4 hours.
Or 4.
4 hours.
So for me, I was thinking that it was going to retrace on Friday because I had like a 1 hour break of structure. So if I was to put my sell position there to offset my initial sell and try to close that out, and then it ended up not retracing and it made a new high, then I have 2 negative sell positions. So it's like, how are you not like over leveraging? Because that's what I do every time.
Hold on. Let's talk about that. You have a sale from Friday. Do you still have it?
No, because
Okay, so
I violated my equity.
Okay. Let's talk. Why would you take a violation when you could have just put a hedge in? This is just a rhetorical question. I want y'all to think about this. Even if you had to take a bit of a loss because I got to hold it over the weekend and I'm gonna have to eat some spread, right? Even if you got in on the sale, and this is why I tell you, you don't have to get every pip. Wait until it closes below the moving average. Because if you think about this, when we look at this on the 2-week chart, I want you to see what I see. When you look at this on the 2-week chart and you fib this 2-week candle, which is all I did was fib this 2-week candle, the pullback to the golden zone is 300 pips. And it's right here. I mean, it's 200 pips. And if it goes to the 78, it's 300 pips. So you don't need every pip in order to get your money back. 340 to the 78, 216 to the golden zone. So follow me on this. On this 4-hour chart, no matter which shape your account is in, as long as it's not violated, I have confidence that you, Rosebud, TT, Elfie, everybody except for Selena, I have confidence that all y'all will use a lot size that's going to put you back in profit in 200 pips. You understand what I'm saying? Now, if I tell Selena, hey man, Selena, you got to go heavier, then she'll ramp up her lot size, but she's never going to put a 2.0, even though she knows it's going 200 pips. That 2.0, if she puts in a 2.0 once she gets this order block that closes below this moving average, if a 2.0 is going to give her almost $2,000.
Hey.
She will refuse to take that because she doesn't do 2.0s. So, but most
people, are you saying 2.0 just like randomly, or are you like calculating that out as like double what the other one was?
So listen, guys, this is how I like to do it, and I don't know how y'all do it. Selena's in a $2,000 account. I mean, $20,000 account, which means she has a $1,000 credit card. She can't lose $1,000 in one day. So once this turns around, right? Once price finishes Wyckoff or whatever, it's going to turn around, and we're going to know it turned around. Whether it breaks a low or whatever happens, it's going to turn around, and it's going to push down, and it's going to pull back up, right? So let me just draw that on the chart. This is where I think the where people get confused. Price is going to push down. It's going to come back up to let us in the trade. Then it's going to push down to our area. Okay. Once you get that push down and that pull back up, you have the controls. So all you doing is looking at this short right here. You got to cover the high. So if I know I can get 186 pips and I got a 35 pip stop loss I got to cover. I got $1,000 credit card. I'm using my freaking credit card. I'm not telling you to use $1,000, but use 800, use 600. If you know that the trade is pushing down, man. Like the people who tell you, traders who tell you that they only use 1%. I got to call bullcrap. Yeah, you use 1% when it's not when the trade is not advantageous to you. But when you have the market trapped, when you have the market in a bad position, you have to make it count. Does that make sense?
Yeah, it does. It makes 100% sense. But like I said, I tried to hop in on a retracement on Friday, and then it ended up going up and making a new high. So I'm like,
which is cool, but what you didn't do is wait for it to break the 4 hour. We talk about this like extensively as a group.
Yeah, I don't use MAs. Maybe I should start using them.
I don't know, like whatever you have to use. Did you get a breaker structure on the 4 hour?
No, I got one on the 1 hour because there wasn't really 4 hour structure.
But exactly. See, to me, this did create the 4 hour structure, right? So now, if you break now on the 4 hour here, now you have a better thing to play with. And in my the way I look at this market is the only reason it pushed down was to give you that 4 hour structure so it can break it today or tomorrow or whenever, right? Yeah. So I'm waiting for the 4 hour break before I go ham. I'm not telling you I might not have entered, but I'm not going ham right here on a 1 hour break. I'm going to use size that don't hurt me, because if it goes higher, if it hooks and ladders you, now you're still not hurt, right?
Yeah.
Because you're just waiting. Okay, as long as it don't push up higher. If it pushes up too much higher, maybe you have to use a hedge. I don't know what your equity looks like, but you say you buy. I would always use a lot size that don't violate your equity or don't allow yourself. Even if you use the heavy lot size, you got to hedge it before it violates you.
Yeah.
There's no question that this is going to pull back. The question is it going to pull back Friday or is it going to pull back Sunday?
Right.
It's going to pull back. So if you just looked at this structure by itself, you see it pull back. It broke this high. It's going to pull back. We just don't know at what level. So maybe it goes up to this and pulls back. But once it does pull back and it gives you that close below the MAs, or it breaks the structure for what, if you don't use MAs, once it breaks the structure, it's going to pull back. It's going to give you that bullish candle. It's going to pull back to that imbalance. And once it pulls back to that imbalance, you load up everybody you know, your aunts, your uncles, everybody get on the bus, and you make your account right.
Okay. No, that makes sense.
Yeah. And then when it turns around, you don't have to go ham because you went ham on the retrace or half of the retrace, whatever. Now, when it turns around, your account is right sized and you can take it up.
Okay. I like that a lot better. That's a way better, this is like way better way to deal with hedges than just like cutting the hedge cold. Cause like you don't always get the same clear like entry that you would initially. So I like this a lot better. And this is what I've been trying to figure out. But to be completely honest, there's not that much on YouTube about hedging.
Well, I agree, but I agree it's not. But, to me, hedging is just like anything else. You're still going to have to get comfortable, and you might come up with a different way to do it. Like this is the way I like to use the hedge. The reason why I want Selena to hold her trade is because during the week, you can easily get lost in the candles. But if you hold the trade throughout the week and it finishes, right? The week finishes and the trade does what it's supposed to do, right? In this case, it didn't work out in Selena's favor. But because now we can see, okay, now it got to pull back and it has to come to us. Now you can correct. You're down $200, but you can go from being down $200 to being up 1,500 on the pullback before the actual moves of the week. I just think you have more clarity by holding that trade. And us as traders, we're so scared of being in the red that week that you'll blow your account to avoid being in the red. That's crazy.
Makes perfect sense. No, this is way better because like, so for me, the way I did it is I had actually closed my buy and I entered a sell, or I wasn't even going to enter a sell. I was just going to wait for it to retrace and then like add a new buy, if that makes sense, and then close my other sell at the bottom of that retracement. So clearly, once I let go of my trades, though, I'm losing all of my leverage in the market. So this is like definitely way better.
Exactly. Because Selena took an L last week, but she has the advantage over the market. She's holding her L. She's just $200 in drawdown. And she can take this and turn it into a huge win, like money that she's never won. Well, she won that money because she qualified the account, but money that she hasn't won because she's chosen not to take advantage of the market. Like I really believe, and Selena, correct me if I'm wrong, when you go in a drawdown, your mindset is, let me just get back to break even.
Yes. Because when I started hedging, for me, when I had a hedge in, to me, that trade was dead. So yeah, but I'm changing that mindset. Yeah.
Yeah. So this is how, I mean, now you actually have the market. Like all you have to do is wait for your break and pull back. That's it. That's all you do.
Yeah, that's way better because like the way I was closing my hedges at first was like I was just closing the hedge off once I knew the direction. And so my 1% net loss was turning into, once I closed the hedge, like 3%, 4%, 5%, and then it was violating my account.
Yeah, so how can it turn into 5% if the trade is going? So let's just say this trade was, you were in hedge and it started going south and it's just going to keep going south. Even when you close this hedge, this buy hedge, as the trade is pushing down, you're gaining equity. So you can't be going more and more into drawdown.
I don't know. I violated my account so many times. Yeah, like I would close the whole
you have to
hedge
do it in smaller increments.
Yeah, so I think you're just closing the hedge off in one fell swoop, and then if it pulls back, now you're going more in drawdown. You got to close it out incrementally as the trade pushes down.
Yeah.
And how do I do that?
Well, you do it over time, but you have to do the math in your head. So maybe let's say you had a one lot, right? And you need to close the trade out as this pushes down. You close 0.25, maybe it goes 10 or 15 pips and you close, whatever. I'm not going to give you a pip count, but I would do it basically off the structure.
So like once it breaks the 1 hour, close 0.25 out. Then once it breaks the 4 hour.
Right. You want to wait for it to pull back after it breaks those structure points up. Because like anything else, it's going to break and then it's going to pull back to that imbalance. That's when you cut it off. It'll sell down. It might break the next level, pull back, then you cut the next piece off.
Hey.
Interesting.
Yeah, that's how I did mine, Rosa. That's how I would do mine.
And then when you start getting more advanced, not only will you cut off your head, but you'll add another sell position on the So
yeah, that's usually what I try to do is I try to add a new position in the direction where I'm cutting my hedge.
Exactly.
But sometimes it's just too much and then it messes me up.
like this is why I said even when you know what to do, you still have to have some time doing it, you know?
Yeah. Facts.
Definitely don't I mean, like, preferably wouldn't open another second position until after the 4 hour breaks and retest. That'll keep it like clean because the 1 hours are just not as sustainable.
Mm-hmm.
And the reoccurring theme is being patient. It's a patience thing.
That part.
It's a forward test. We're all figuring out our own fingerprint on how we do this. There's only one way to do it, and that's the right way. So when we start getting impatient, we start shooting ourselves in the foot over and over and over again, and the 1% becomes 5%. That's how that happens. It's just, you know, but it's something that you individually have to complete the task, really. And no one's, once you see it, and it's just over and over and over and over, just seeing that same thing over and over and over again, and start changing that from a negative to a positive. And it shows in your account. And instead of losing 1 to 5%, you're starting to gain 1 to 5%.
And something else, if I'm for me, transitioning from, you know, always trying to qualify an account to keeping an account takes a mental shift. So I'm always used to just trying to qualify. You know, that's where my brain has been for the last 2 years. But now that I have this account, I'm trying to shift my mindset to saying, hey, if I don't win a trade this week, it's okay. And I can hold it over as long as on my payout days, you know, I am in that positive place for a payout. And even if I'm not, it's okay on that payout, but I still have my account. I'm not worried about violating it. And the trade is going to, you know, turn around in my favor if I just don't, you know, quit. Because it took a part of me was like, man, I'm just going to close out all these trades yesterday. And I was like, no, you got to hold it through. You didn't over leverage. You don't have to worry about the spread on Sunday. You're fine. So it's a mental shift for me. That's what it took. And I'm still working on that mental shift from not thinking always qualifying and being patient for sure.
I have a question.
Yeah.
Can you take a withdrawal while you have trades open?
No.
Okay. Makes sense.
You got to close some trades up. And some of the companies will take your account. Like when you close your account, they send you a new account. Some of them just you can't trade on that account for however long it takes them to process your payment.
And when it's all said and done, it's buy low, sell high. You could put 10 trades up at the top of the structure. I guarantee you they win. It doesn't matter how high it goes. You're at the top of structure. So
that's why, I'm sorry. Go ahead, G.
Go ahead.
No, that's why I was just saying you got to use that credit card, man. Like if you know that this is selling, like once it pushes down, you got to use that credit card because you're never going to get paid if you're not taking advantage of the move.
Hey Todd, I'm going to use a Leandra pause moment right now. That's huge. If we're not paying attention to what you're saying, because I feel it, I've known it. I've always known it, and all of us have known it. But that's huge. If whatever size your account it is, and how much you can lose a day depending on your account, like $1,000 is what I could lose. And I think that gave me some ease this week, even though I've always known it. It just had to be said at that moment for me to be like, okay, you really tripping. I've never lost $1,000 in a day. You know what I'm saying? The day starts over at 5 o'clock. So you're not going to get there unless you just put in a stupid lot size that you know you shouldn't have put in. And that's self-sabotage. But if we take advantage of that credit card, man, that's huge. And that gave me a piece. I'm nowhere near maxing out my credit card. That's how I'm
Well,
calling
that's what
it.
I've been telling you for months.
I said you had to say it that particular. I don't know. It just
I had to
clicked.
do it that way. Okay.
Yeah.
Wait, I'm lost.
Okay. But then it what's
What you mean by credit card? I'm sorry.
Sorry, we'll get back to that, Effie. Following up from what
No,
Selena
I need to know now.
Oh, try to explain the credit card situation.
Oh my God. Okay. Let me explain it to you, Elfie, because you're a female.
Oh
Thank
my
you.
goodness.
Whoa,
So
whoa.
listen. No, I mean y'all understand. Y'all do you use credit cards in your life, Elfie?
No.
I do.
Sorry.
Okay, so I don't know how you use your credit cards, but if you had a good sale, you would take advantage of that sale with a credit card. Even if you didn't like if you was going to get paid 2 days from now or whatever, you're going to get paid 4 hours from now. That's the same thing that we look at in trading, right? Selena does the order block. Selena does all this for the group, and every week she'll get on there and say, "Hey man, this did this did this." So what I told Selena was, you have $1,000 credit card, right? And every week you get worried about going $100 in drawdown. It to me it makes 0 sense. You can't get paid on her account for, is it 4 weeks or did they switch you to 2 weeks?
2 weeks.
Okay, so you can get paid every other week, right? So who cares if you carry a credit card balance into the next week? As long as you don't violate that account, which means $1,000 a day, you're going to be fine. So what? You go $200 in drawdown. You wait. You hold that drawdown because every week we get on the call and we can see the moves clearly. So you just hold that drawdown into the next week. Maybe it clarifies stuff for you. Just like this move, we know that this is going to pull back. I can't tell you, hey, it's going to pull back an hour after the market open. Even if it pulls back 4 hours after the market open, now you're gonna, the credit card is gonna pay out because now you can put extra position size on the sale portion. And instead of being $200 in the red, now you can go from $200 in the red to 500 in the blue, or 1,000 in the blue, because you can put a bigger lot size on the sale because you see and you understand where it has to go. When this was buying last week and we thought it was going to sell, you kind of you don't know where it's buying to. Okay, it's going, this is where it might be going to. It goes past that level. It pulls back. Well, damn, where's it going next? Maybe you don't feel as comfortable. So you just hedge and hold the position, right? Instead of blowing your account, just say, hey, man, my analysis was off. I'll just lock it up. I won't lose any more money, and I'll let that position go. At the end of the week, I'll relook at it and redo my analysis, and we'll see where it stands. Well, at the end of the week, it's basically a bullish order block. It thing went 400 pips or 300 pips, 390 some pips to the upside. So if it just pulls back to the golden zone, that's 200 pips. We all can eat with a 200 pip move to the golden zone. Even Selena, even somebody using a smaller lot size. But once the lot size starts pushing down, I suggest you use a larger lot size because you know exactly where it's going. We know it's at least going to the zone. I'm not saying she has to hold it past the zone. She could stop it right here at the 50. And that's going to be 186 pips from where it is now. And 186 pips of using a 1.0 lot size, bruh, that's $1,800. If I mean, for JPY, it's a little bit less, but still, it's huge.
People get stuck putting the buy at the top of the structure, and that's what people need to just don't do that. It's like, okay, so the explanation is, or the scenario is, you're negative $200 because you have the buy down there towards that last high. You're putting a sell in right there, and then it broke through the structure, and now you're $200 in the negative on your sell, when due to healthy price action, that it has to pull back. We don't know when. Everybody thought it was going to sell from that position down there. So we're already in the mind frame of the sell. Okay. Now it broke up thrust, right? It's in the up thrust. The only thing that you can get after an up thrust is an up thrust after distribution, UTAD, right? So if this is not the high point, it's one level above that. So if you put the buy at that point, expecting it to go higher, right? Because I'm saying don't put a buy at the top of this structure. But if you don't want that 200 to go to 400 in the negative, then yes, you have to put the buy in up here and then let it go to that upper level, catch the sell, and then let the buy, you put the stop loss in front of the buy. Now you have the sell in the highest position. You use the hedge to catch it to protect the 200 from going to 400 negative. And now it's coming down to do the pullback. Now you have the sell at the upper level position that's going to give you the profit so that when it comes down to that position that he has marked off at the 50, let's say it's the 50, you took the sell all the way from the top of structure, and now you're 1,000, 2,000, whatever you are in profit is going to cover the other position that was negative 200. So you don't even have to get that to break even. You just got to catch the sell at the top of the structure to take over for that sell that you had incorrect. Now, whatever the negative is when it comes back down, or let's say it comes back to the entry completely, you took care of it, right? What if it doesn't make it all the way down? Well, you're $1,000 in profit from the top of the structure. So you might have to take $100 hit. So once it comes back down and you're now not 200 in the negative, but you're 100 in the negative, but you're 1,000 in profit on the upper sell. So now it's $1,000 minus 100. Now you're $900 in profit. And now you can take that sell and put it on the buy because we're in a bullish order block. This is your self-talk. You have to be able to navigate that. And there's many aspects to it. There's many layers to it, right? And you got to be privy on all of that.
You have to definitely be privy to your self-talk and what you're saying to yourself. Like, sorry, OG, do you want to carry on?
No, that's it. That's all.
Yeah, you have to be privy to your self-talk and what you're saying to yourself when you're in these trades. Like Selena said, and like I said about confidence, like if you've done your analysis and you know what you're doing, you know you're in a hedge, you know it's going to sell to buy, but you're in a hedge, so you know what to do, you know exactly what to do, how to get out the hedge and how to re-enter for a trade. You know, it's all about the self-talk and the confidence that you have in yourself. And like Selena said as well, it's like when you're in a funded account, it's a different mental game. You're trying to just stay funded. And if you do go into drawdown, you have to trust your analysis that you're going to get out of that drawdown. You have to stay. Trading is being comfortable in the uncomfortable. You have to be uncomfortable in that situation that you're going to get this money back. You're in a hedge, so you're bound to recoup whatever you've lost. And it goes down to your trading plan. What's your trading plan? What are your rules? What are in your rules to risk to your loss? Like Todd always taught me, 2% loss per week. That's it. If you lose 2%, you can't trade for the week.
And it's all about that stop loss. How wide do you want to have the stop loss? This is the math for every individual person. This is your math, your fingerprint.
Yeah.
When you slide that stop loss, it has to be within the parameters of your rules. If it's 1%, if it's 2%, whatever that is, that's what your stop loss dictates every time. And we see here, we're at the top of the structure. And you see how he has that entry marked is because it has to break down first and then come back in and give him the entry. Now, if you want to be John Wayne, you can put that marker that he has with the green and the red, and he could put it up at where it is right now. Now your stop loss moves up, right? You can enter right there, but you know that if it stops you out, it's not going to blow your account because you calculated what you wanted to risk on that trade. And when, like you said, with the 100 pip stop loss, it's exhausted already. So it has to do a healthy pullback. So it's got to drop. So you can enter right there and use the same technique, 100 pip stop loss, something that doesn't blow your daily drawdown. That's it. That's all.
Okay.
It's a lot of times you'll see, especially from the people that came with OG's group, you'll see them when they show their stuff, they have a lot of positions at 0.01 or 0.02. It's because of this stuff, just like this. Once price gets up, like this might get up to where they think it's going, 145, right? 145 quarter, boom, sell. Maybe it goes up here, but by the time it comes back down to hit this zone, they're way in profit. And that 0.01, you know, might be 15, 16, you know, $20. But they might have 5 of them. You know, it just depends on how you're planning and how you're seeing the move. Everybody in here, you know, all of us think that this is going to pull back at the first of the week, right? I think we're all, I mean, is there somebody that doesn't believe UJ is going to pull back? So if everybody really believes that, then everybody, you know, is capable of taking this trade. Right? And even if you say, well, Todd, it might pull back, but it don't pull back to the zone. Well, you take your pullback to 38. I don't, you know, wherever you think it's pulling back to. I'm holding mine into the 50, but you hold yours to wherever you need to hold it from. My point is, you know, it's pulling back from here. If it pulls back 50 pips and you're banking on those 50 pips, you're probably not going to lose. So, you know, you as a trader, you have to be able to take advantage of the move that you see, right? If you see a move from here to the top of this order block and you tell yourself in your head, man, you know, I got a 90 pip move. How much money can you make in 90 pips? How much money is on my credit card?
Right.
You know, like it's to me. Well, I'm just saying that's where everybody will hopefully get to as traders. Some moves are your go-to moves, you know, whether it's a bearish or bullish order block. Maybe you like trading those and you're going to risk 2% on those, or you're going to risk more on those moves. Maybe you have a pullback strategy that, you know, you risk more on that move. For me, if I see and I know that I got this thing where I want it, that I'll use more of, or I'll use a bigger risk on that move. But you guys have to get comfortable trading in the way you trade. But
the beauty of this move is that, oh, it's bullish, and then bang, bearish order block. That's how it happens. And then people are shaking, their anxiety, they don't know what's going on, they don't know up from down, and it gives you that bearish order block, and it comes right back and taps you in. And that's the move. It has to do the healthy pullback. When you see it, you're like, damn, really? And then you got to have that feeling 100 times. And it's like, there's your confidence. You know what healthy price action is supposed to do. You could take advantage of it. If not, almost every day, every 2 or 3 days. And I like the 2 or 3 days, right? You let market open and you get that 3 days. By Tuesday, we're looking at the entry. That's what we're planning on doing as a group. Everybody's going to be able to come in and we're going to have this discussion. We already have had the discussion right now. We already know what's going to happen. So by Tuesday, we should be looking down there for the buy. So, and then it'll be the way of things in IC Forex clearly, because everybody's going to see it. Everybody can take advantage of it. No excuses. We're putting it out there. It's been put out there ever since I've been here. It's the same conversation, and people are starting to have their aha moments, and it's just going to get better and better as we go.
So is everybody clear on that?
Clear.
Clear.
Yep.
Clear as mud. Okay, that's all good.
Yes. Yes, sir.
Crystal.
So what else do we got to discuss?
Is gold going to 2,000? There's an order at 2,000, right on the money.
Listen, gold going down, man.
Yes,
It's going to 1860.
1860. Let's get it.
But it got to pull up first.
Yeah, that's what I'm saying.
I'm so
It
mad
might.
I didn't say gold this week, man. It was a gold mine, bro. Whoever traded gold got paid, boy. I'm over there messing with Selena.
Believe it on me.
That's right in the zone, too, boy. Right where I got more.
That looks good, man.
You can already see that white card playing out. Gold need to come back up here. Here's your zone. There's your 78 is up here. There's an imbalance right here. It's all beautiful. And then we're gonna get that gold tank. If I look at this 2-week joint, man, whew, this is where I think gold need to come down here to tap into the zone. $18.60.
And there we go with that Wyckoff again. See, you got the bottom down there. It'll come and give you an equal bottom, and then it'll go down and grab liquidity. So that means, yeah, 1750. So that's fire in Fuego.
If gold come way down here to 1725 to this imbalance, listen, I think it'll come down. I just don't think it'll be anytime soon.
Right. Maybe by October.
I don't, man. I think gold gonna drop $2,000 by October.
Probably.
I don't think so.
Hearing a lot of rumors that next year is going to be the floor, so it'll probably be bearish until then and do a bunch of zigzagging. But you see the middle of the structure. That's exactly at the top of his box. If you look at that structure, that's what when I pull up a chart and I just have a bunch of candles, I need to see the top, I need to see the bottom, and the middle. It's very clear, very clear. It's going there, minimum.
So what y'all trading this week?
J and GU.
What about GN? GN look crazy too.
That's what I said. I like GN.
Yeah.
GN always give you 300 and some pips.
Hey.
If it pulls back. That's 260 to the 50. 429 to 78. GN just don't play fair, man. They don't pull back to the 78. But if it do, ooh. See, we got the price flattening out across the top. I just need to drop down here. Here's a block, an untouched block in the zone. This is kind of, this block was tapped, but this is a close block to the 78. Yeah, I mean, I like GN. I like EN for the pullbacks. I'm still bullish on GC. I like this chalk right here. It's a huge imbalance. I know that's a daily joint, but still. There's an order block right here, right in the zone. Right, I guess it's in between the 61 and the 78. Yeah, I like both of these. None of y'all took a EC, a GC?
Yeah, I got on some GC.
We got a 9-day order block. We got 3 days left. But I like for it to pull back before it pushes up. I don't know why this thing is showing exhaustion. But this is my FMC. Man, I ain't used this chart since I was doing these lines, huh? It's crazy.
A long time ago.
But look how our price kind of came back there. This just broke this high. It's taking a sweet time, but there's an untapped block right here, and then there's a order block right here at the 78 too. So if you're looking for an entry, I would wait and see if we can get a 78. But if you can see, just came down, manipulated these lows across the bottom before it got up out of Dodge. It broke these highs, so that's your show of strength. I mean, it can go higher. Now it should pull back and let you in the trade, so you can bounce. It seems like we've been talking about GCAD for the last 3 weeks. Patience, patience.
heard some rumors they might raise interest rates again on GDP.
On GDP?
Yeah. That's no surprise there, really.
Yeah, hopefully. Y'all have CPI this week, so
Yeah.
We should get some clarity.
In understanding the idea of these interest rate hikes and how you see a preliminary push to the upside and then it drops, like that's what happens long term. So I'm forward testing that right now. All the interest rate hikes that the U.S. has done, I think it's 11 or 12 now, and it causes a preliminary spike, and preliminary 6 months of bullishness, crazy, right? And then it has to pay the piper and come all the way down and flush out everything. In the long run, it's going to flush out. So I'm hearing people talking about the pivot that we're getting right now could last in 12 months into next year, and then we get the bottom next year. And it's just a theory, but if that plays out, I'm telling you, everyone in this group is going to win. You're getting a price at the bottom that you're never going to have to close. To think of that when you first started trading, like to think that involved in that is ridiculous. Never close. Use the right lot size so you can take profits.
And then just add positions on a
That's right. Keep adding them. Yeah. You're in profit. Once you're in profit on the right position, you will never lose. You're just adding and compounding and riding the momentum and catching the healthy pullbacks. And you'll be doing that for the rest of your life. It's tricky on currency because currency has balance, but there's other things like gold, right? Gold and NASDAQ, the indices. You're not going to see these prices ever again. You're going to see GU go to $1.50 and then back to $1 and then to $1.50 and back to $1. That's what currency does, right? So understanding the differences of those pairs, they have a cap. Currency has cap levels. Metals and indices and commodities, they don't have a cap level. They have a resistance level, but it always breaks the resistance. It continually gains, within the asset itself. Currency is not really an asset. It's not an asset.